everyone, welcome to the channel again for an educational videos that I would like to make for you how to trade Elliott Wave analysis. Now this channel of course is basically to offer you of course more analysis for all the cryptocurrencies on a daily basis of course, and but the only thing that I would like also to mention for this channel is that it's also educative, and I would like to spread of course the education how to trade Elliott Wave, because Elliott Waves are really a powerful tool that you can make a lot of profit with it in the market, but it is also very risky if you don't know how to use it, right? So I would like to explain much more about the Elliott Waves and how it works, and what are the Elliott Waves, what are the most profitable waves that you can trade, and what are the risky waves that you can trade. Of course, Elliott Waves can be used not just for cryptocurrencies, but also for Forex and stocks and every chart that you can see in the market to analyze. But of course we need to understand Elliott Waves deeply, and remember that not all waves are created equally, right? And some of them are profitable, some of them are more profitable than the others, and some of them carry like a very high potential of risk, right? So by the end of this series of videos, you will spot exactly the profitable impulsive waves and how to handle with the tricky waves or with the risky waves, right? So let's start first with the patterns of Elliott Waves that you might face on the chart, and especially when I analyze a chart and give you some hint or some indication of impulses, diagonals, or multiple 1-2s, or on the opposite way when we are corrective, I give some signals of flats, WXY, or triangles. So to have much more deeper understanding, let's start with the impulse, which is one of the most important motive waves. And this is where you want to trade or to enter your trade, especially when we signal an impulse, a start of an impulse. Why? I'm going to explain exactly. An impulse is made of 5 waves: 1, 2, 3, 4, and 5. So the impulse is indicated of course as 5 impulsive or motive waves. It means motives is a very strong trend. This is what it means, a motive waves. It signals the direction of the trends. So when you see 5 waves, whether it is to the upside or to the downside, it tells you the trend of the price on which direction is going, right? So in your impulse, you have 3 waves that are also inside this impulse, which are also motive waves, which are the wave 1, 3, and 5. Inside your wave 1, you want to see as well 5 waves towards the upside. In your wave 3 as well, you want to see 5 waves towards the upside. In your wave 5, finally, also you want to see 5 waves towards the upside. Of course, the wave 2 and the wave 4 are corrective, right? And when they are corrective, it means that we are looking for 3 waves towards the downside. I'm gonna put it in red, right? Here we go. So in your impulse, the most strongest impulse that you would like to trade is your wave 3, okay? Because your wave 3 is normally the highest and the biggest wave in your impulse. Therefore, you want to enter your trade exactly once the wave 3 almost starts. By all means, once we see 5 waves toward the upside, for a wave 1 here, as we mentioned before, once we see those 5 waves towards the upside, then we are looking for 3 waves corrective, right? Then we have to start another 5 waves towards the upside to start your wave 1, 3, 4, 5. Now once your wave 1 of a wave 3 has started and passed this level here, this indicates, of course, your entry. Your trade entry would be much more profitable and less risky when you, of course, reach higher than this point here. Once you do this, you're gonna, of course, trade the whole wave 3. Now, there is, of course, 2 ways to trade this. I'm gonna explain. So your trade, your profit should be from the start of the wave 1 or after it in few prices a little bit, and then hitting exactly the 1.618, which is the most common fib level for wave 3. So once we have this, in that case, you want to, of course, trade as well, maybe your wave 5 after all. So that is 2 ways how to trade this. Now, let's say you enter your trade here with an amount, let's say, of $100, okay? And then the prices went higher. It has hit the fib levels here, and you made a profit of, let's say, $200. You doubled your profit, okay? We're not talking here about, okay, the leverage and so on. Let's just talk examples. So you have doubled exactly your profit. The perfect way to trade this, because you know this is an impulse and you are looking for a wave 4 and then wave 5, right? Once you reach the 1.618, it is preferably to mark this as your take profit 1. And that means in your take profit 1, you want to take at least 50% of your trade. Okay? That means you want to take from this $200 here, let's say, okay? From this $200, you want to take 100 already to your capital. Okay? Therefore, your trade now, your profit here is still 100 after securing another 100 in your capital. Now the price moved down, right? The price moved down, your profit here, your 100 moves down to 75, right? Because you start to lose for your wave 4. Now in that case, you don't want to, of course, exit your trade here. That is always a signal where a wave 4 can just be limited. I mean, where the wave 4 can invalid this impulse if it goes very deep. If your wave 4 goes very deep, deeper than the 0.618 fib level, then your impulse is invalidated. That means we will not see a wave 5. Therefore, this is going to transform to 3 waves towards the upside and continuing towards the downside. That means that was a tricky trade or tricky impulse. What happens in that possibility? In that possibility, and when you touch the 0.618 and you go lower, your stop loss is already here. That means your 100, which it was here, has become almost $50, right? On that price action here. Because from 100 here, you have lost almost the half, so you are left with $50. Therefore, your stop loss is here. So you go out with a $50. $100 already secured before, which is in total $150 for your trade. And you did not risk for a full reversal with all your amount as $200 here. Because if you left here with $200, okay, and you wait after the wave 4 to finish and go higher, if the wave 4 touches the 0.618, you have been left only with $100 as profit, because 200 minus the half of it is just 100. So which one is profitable more, 150 or 100? So this how the idea to trade, of course, is this impulse. Now, of course, let's come back in a case where the wave 5 continues towards the upside. You have been left here with 100. We went down and you became here at $75. Now the wave 4 has formed another 1, 2, and it's going for 3, 4, 5. Once the price reach over the wave 3, okay, of course you want to hit your level for a wave 5, which normally a wave 1 matching always the wave 5 in price and time, 70%. Therefore your target is gonna be the same level of a wave 1 in the top here as this impulse shows. If you enter here another trade with another $50, then your trade, when you target this wave 4, is gonna reach again $150 as profit. Therefore, you have ended with 150 plus 100 already taken from this TP1. This is your TP2, and you finish your trade. Then you have finished with $250 as profit. Checked. Your trade has finished by trading, of course, wave 3 and wave 5, right? But in the less risky way that you can manage a trade. Okay? So this is the most profitable way how to trade an impulse for an Elliott wave. The other things that I would like to mention, of course, is when you have another type of motive waves. Now this is for the impulse, this is exactly how you want to trade it. Now another type of motive waves is your diagonals. Your diagonals, the most common diagonals that we see in the market are contracting diagonals. Okay, where we can see 5 waves up, right? Your 5 waves up, sorry, this was not a clear diagonal. Your 5 waves up should be, of course, very clear as diagonal. By all means, your wave 1 should be the biggest wave. Oopsie, sorry. Your wave 1 should be your biggest wave of your diagonal. So this wave should be the bigger than the wave 3. The wave 1 should be bigger than wave 3, and the wave 3 should be bigger than wave 5. And your wave 2 should be bigger than your wave 4. Your impulsive waves in this diagonal are, of course, again, the wave 1, the wave 3, and the wave 4. In a diagonal, it is not necessarily, of course, that those waves are always impulsive, right? It could be impulsive, but not necessarily always, right? It could be also as a zigzag. You have 2 possibilities of diagonal. So it could be zigzag up, zigzag down, zigzag up, zigzag down, and then zigzag up. This diagonal, this nature of diagonal is a little bit risky to trade. Because if you want to enter your trade for a wave 1 here, you're gonna have, of course, to start by waiting for your 5 waves, your initial 5 waves for a zigzag, then the retracement, then start your trade again after reaching your 5 waves up. Therefore, your take profit TP1 should be already here, right? Now, again, you want to wait for a retracement. Of course, you have your fib level given on our analysis that we provide always on this channel. You have your fib levels for a wave 2. If the price move lower, then you are already in risk, right? Therefore, this type of diagonal is very risky to trade. when it is zigzags. However, when it is impulsive, it could be much more safer. Why? Because you want to enter, of course, here. And once you enter here, this is, of course, again, your TP1. Now, of course, the wave 2 should go down. Of course, it should not reach almost here because, yeah, it's really risky then if it moves down. This, you are looking to something else. So yeah, if your wave 2 reach lower than this, then you are looking to something else. This is not a diagonal. And by the way, it is very risky to call a diagonal starting from a wave 1 and 2. Therefore, this trade could be very risky. However, because we saw 5 waves up, 3 waves down, and then we passed this 5 waves up, therefore you want to take your trade here and finishing maybe even this trade there. Now your wave 2, if you want to be much more risky a little bit, then you take your TP1 50% and then you wait. If you goes lower, then your stop loss should be exactly on your entry point. If you go higher again, that's good, you're back to the trade, and once you reach over this level, you want to add to your trade much more inside. Let's say you started with 100. Once you reach this level, you want to add 150, right? Reaching here, the wave 3 with the fib levels, you want to take your TP2. And the same thing repeats there. Once you reach this higher high here with your impulse, then of course you want to add until 200 here, and then of course take your TP3 and finishing this trade already there. So again, this is the second most profitable waves that you can trade in Elliott waves, which is a contracting diagonal impulsive waves for 1, 3, and 5. When the 1, 2, 3, 4, 5 are all zigzags, then it is not really, it is much more risky than trading an impulsive waves for a contracting diagonal. So these are the things for the motives waves. Now be careful, I would like to mention as well that sometimes it is very tricky to analyze a contracting diagonal with impulsive waves, and then it might turn into a multiple 1, 2. So what I'm saying, it might look for you like this is a diagonal where you see here 5 waves up, 3 waves down, 5 waves up, 3 waves down. So 1, 2, 3, 4, it looks like perfect diagonal shape. Now you want then to finish your wave 5, take all your profit here, right? It is very, very risky to start selling because, of course, some traders are, okay, the move towards the upside has finished. I took my profit here as buying. Now I want to sell because, yeah, we see 5 waves up, now 3 waves down. Be careful that this might turn into something else, which is 1, 2, 1, 2. Because we have impulse, 3 waves down, impulse, 3 waves down, then we see another impulse here, right? Then we start to see 3 waves down, and the trade is, oh, okay, yeah, it's going down. We're going for a wave 2, right? As 1, 2. Then suddenly, it moves up explosively and massively, right? Some traders don't put their stop loss there and finish with a bigger loss than their trade. Here, what they made is profit. Why does this happen? Because this diagonal shape, right, has transformed to 1, 2, 1, 2, and then 1, 2, 3, 4, 5, 4, 5 as an impulse. So normally contracting diagonal can always be a potential of multiple 1, 2s. Therefore, be careful from selling directly after finishing a contracting diagonal. Okay, so these are the risks of of Elliott Wave analysis or of Elliott Wave patterns when you don't know how to use it and you don't understand it exactly how to use it. And by the way, I get a lot of comments about these things that, and that's very normal that if you don't get educated about Elliott Wave, how to trade it, it is very normal, of course, to get in a very big risk of losing your capital as well. So after explaining now these multiple ways, of course, these are the most most impulsive ways that you want to trade in Elliott Waves. So this video is gonna end exactly here, and then of course the next one is gonna explain the corrective waves. Of course you can trade it, but it's much more risky. However, I'm gonna explain it how you can trade it in less risk. So see you in the next video. Thank you for watching, and don't forget to hit the like button, and have a nice day. Bye bye.